Good morning, everybody. Mike Vaki, PrincetonTrader.com here for NTMarkets.com with your Thursday morning pre-market webcast. Well, a very happy New Year to everybody. Hope everybody had a fantastic holiday. New Year's Eve, we had that typical New Year's Eve action where, we talked about the floor at 33.5. We're going to talk about that again in a minute because it's still very, very relevant. There were only so many shots the Bears were going to get to take out 33.5 before the dip buyers just said, you know what? Happy New Year. Here we go. And they took it, and then after the cash closed at 4 o'clock, they really took it. So we traded as high as 1846.5. We closed the year on the highs, which is appropriate for this year because it's been an absolutely straight up year. Where do we go from here? Well, the upper Bollinger Band is kind of starting to get away from the bulls. It is 18 handles above. So to touch that today would take a real serious rally. But if you look at other New Year's days, first day of the new year, the last couple of years, they have been strong days. We gapped down this morning, but where did we gap down to? This is that same 30-minute chart I showed you guys on Tuesday. I haven't touched it since I finished my webcast. And, there's your 33.5 price level right there. They played around with it, tried to threaten it in the overnight Tuesday, and finally it was just time to go. Higher low here, made new highs. We gapped down. Did we breach 33.5? No. And so that has to be a concern for the Bears. The Bears have got to get through 33.5. They absolutely must. And if they get through 33.5, they're going to have 1831 waiting for them. But if they get through there and get down into 28, I still have as a downside target the 1812 half highs, the old highs. They were highs for a long time, and they really should be tested. And that's right down in this area here where I've got my cursor. But the Bears are going to have to put together more than 20 minutes in order to make that happen. So what do we look for today? We look for the ability of the Bears to trade below the Tuesday high. So what's our low today? 34 quarter. Right now we have matching highs. Matching lows rather. Matching lows are a worst case scenario. The Bears have to stop doing it. They have to stop doing matching lows and creating floors. So right now we have matching lows at 34.5. And we have created a floor at 33.5. And until that area of support is broken, we're not going anywhere. We're either going to trade in a range with an upward bias, or we're just going to go back up and touch that upper band up at 1856. So we'll have to see how today plays out. The Bears, with that gap down this morning, the Bears have a chance. If they can, if this morning we go up and we make an established lower high versus 46.5, come back down and break through 33.5 on the next move down, then the Bears are in control. So the Bears need to have a good day today because if the Bears roll over today, let the matching highs down at 34 stand, and we make new highs again today, I think they're pretty much cooked for the rest of this week. So everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. A lot of people starting, new year. A lot of people coming in, trying to add some good information to their trading. We would love to help you. We'd love to meet you and see if we can do that for you in the new year. So everybody have an amazing day. I will be back tomorrow morning with another webcast. Trade them well.